Today, I'm going to reveal to you guys how I made $1,000 with my breakout strategy. Let's get into the video.
It's not a game, sir.
These are what we are going to look at today. We are going to look at what are breakouts, how to identify breakouts, the setups and how we can trade them. Then we're going to look at how to avoid false breakouts, and lastly we're going to look at the entries and the exits. Stay tuned, guys. A breakout is when the price of an asset is moving outside the defined support and resistance level with increased volume. Now I'm on the GBP/USD 4-hour time frame, so the first thing we're going to talk about is how to identify breakouts and how to trade them. That's what we're going to look at now. From our chart here, the first thing we need to do is that we need to identify key levels. What did I say? Identify key levels. So you bring out your trend line tools, then I can see a key level here. I can see a key level here. Okay, so I can see a key level. You guys can see the key level. It's very easy. Just the first step is to identify key levels. Then after identify key levels, we trade the breakouts. Now let's take another example on how to identify breakout. Let's take another example. Now on here, what can we see? We need to, so what I told you first, for you to trade a breakout, you need to find the trends. You need to know where the market is going to. You need to know the trend so you can connect the dots and spot where you can see opportunities. Here we can see the market is ranging. We just need to identify key areas in the market, like where the markets bounce off from. I understand, like areas where the markets were rebounded from. So that's what we are doing. We identify the key levels. Then let's see for the resistance. I think this is the key level. Yes, this is the key level. This is the key level. Understand? So this is it. This is the support and this is the resistance. That's it. Let's take another example. Now on this market now, what is the trend? For you to find the trend, what's the first thing to do? Identify key levels. What can we see here? I think this is the key level. And this is the key level. This is the key level. Yeah, these are the key levels. Then we have the breakout. Now that's it. Now let's dive in on how to avoid false breakout. You understand? Because 80% of the time when you're trying to spot a breakout, 80% of the time is always false. You need to know how to identify false breakouts so that you can have at least up to 80% win rate. Understand? Because when you've eliminated that, I think you have close to that. You have almost close to 80% win rate when you've eliminated that. Because the strategies I'm going to tell you that we're going to apply will eliminate that, and you guys will see how it works out. So now the major way for us to identify false breakouts is that, watch guys, if you can see here, the market reversed by the wick only touching this resistance zone, by the wick only touching this, by the wick only touching this, by the wick only touching this, here too, by the candle. Understand? Only touching by the candle, by the candle, by the wick, by the wick. The only way we can spot a real breakout is when the market is being broken by a big momentum candle. So something we have here, this is a big momentum candle. This one right here, I'm showing it with my mouse now. This one right here is a big momentum candle. It could be a big momentum candle or multiple medium candles. Understand? I'll show you more examples so you guys will understand what I'm trying to say. It was broken by a big momentum candle. This is a real breakout. So take our entry here after the breakout. But for more accurate trades, listen guys, for more accurate trades, this is how you can scale it to 80 to 90% win rate. For more accuracy, you wait for the market to come back and retest the zone. Now it didn't retest the zone, but it still came. Understand? It doesn't happen in the market, but I'll show you guys more examples. You understand what I'm saying? Let's take another example. Guys, this is another example. First, what do? We mark out key levels. So these are the key levels. These are the key levels. You can see key levels is just where the price respected, where the price bounced off in the market. You understand? Where do we price of the asset respected those zones. That's what we identify. So how many key levels do we have here? At least for your trend line to be valid, you need to have at least three zones. How many do we have here? 1, we have 2, and we have 3, and we have 4. Those are the 4 zones which is respected and bound zone. Like this one now, this is just a breakout, you understand? So just this are handy to see what I told you. This is the first breakout I'm telling you guys to be careful about. Now this is a very good example. You can see how this candle broke out, how this market broke out. How did it break out? It broke out with a weak candle. You can see this is not an impulsive candle. You understand? This is kind of looking like a hammer. You understand? This is just a medium candle in terms of strength. If you understand candlesticks well, this is just a medium candle in terms of strength. Just showing that the buyers and the sellers were almost equal. It doesn't show that the sellers have took control of the market. You understand? This is the right way to trade. You see, it tested us again, broke out with a weak again. So you can see this is a very good example. It broke out, multiple candles, broke out, multiple candles, broke out. Then it came back to do what? Retest. You see, it retest here. I'm telling you guys, it came back to retest the zone. This is what I'm telling you guys. This is how to trade it the right way. Guys, you can see, let me use this to show you guys well. You can see the market came back to do what? To retest this zone. You can see it came back to retest it here before moving upward. This is a very accurate trade which has at least 90% win rate. You understand? Let's take one more example again, because I want you guys to understand this very well, very well. I want everybody to be profitable in this market. This is another example. So what we first do, we identify key levels. What are key levels? Areas where the price had multiple touches in the market. You understand? There are zones where the price respected those areas. That's what we identify. He touched the zone, bounced up. He touched this zone, it bounced up. Touched the zone, it bounced up. What did I tell you guys? When you have at least 3 areas where the market respected on the trend line, that's when you have a valid key level. You understand? Areas where at least the market respected those areas at least 3 times. So that's a key level. We've done that. Now what do? We watch how the market. This guys, I'm just showing you how it is in the real market. This is our real market. You understand? First, it respected, then okay, respected, and then here, when it got here, what happened? When it got there, what happened? The market dropped. It dropped. Now, this is not a momentum candle. When I mean momentum candle, this is a momentum candle. You can see this big one. This is a momentum candle. This is what I'm talking about, a big momentum candle. This is a big momentum candle. Let me show you guys. You see this one here, see this bullish candle, that's a momentum candle. You see this bullish candle, this is a momentum candle, a very big candle. You understand? A very big candle which has very little wicks attached to it. You understand? I'm just trying to simplify this thing to you guys, so I don't think it's something scary, because what I noticed on YouTube is that most traders try to confuse you guys with a lot of languages and stuff. You understand? What really matters in the market is when you are making money. If you like everything in the world, if you can't get money from the market, it's good as meaningless. As it, guys, so you can see the market broke out, but it's not a candle that has the momentum we're looking for that could show that the sellers are in charge of the market. So what could give us a better confirmation is a retest. What did the market do? The market came back and retested the zone before spiking down. You can see, guys, that's it. Now guys, we're going to talk about how to enter the market when trading breakouts and how to exit. First, I want us to include some moving average. I want us to include some 2 moving average, which is the 8 EMA and the 14 EMA moving average. That's 18 exponential moving average and the 14 exponential moving average, because those will be very key for our exit. Now I've added the 2 moving average, I added the 14 moving average and the 8 moving average. I'll show you guys how we'll use that in a jiffy. Now, entry and exit, I've explained to you guys. Market bounce here. This, you see, this is a first breakout. This is not a momentum candle because it shows weakness in the market from here. What happened? The market went back up. You guys can see these things. You guys can see this. You guys can see these things. It went up, rejected here, went back up, rejected, went here, support area. What did happen? Rejected. Then the market dropped. You can see. How did the market drop? What I told you guys, a big momentum candle. You can see a big, this is a good example of a big momentum candle. In this case, where should be our entry? This is our entry. In this case, guys, I will advise you to first go for a 1 to 2, a 1 to 2 risk reward, a 1 to 2 risk reward. Our stop loss will be a couple of pips above that resistance line. Then look for our 1 to 2 risk reward ratio. We had it very, very easy. The reason why I added this moving average is for us to exit our trade. After we've gotten this 1 to 2, what you can do is for us, you can shift your stop loss to this zone. Let me show you an example. Shift your stop loss to this zone. Now shift your stop loss to this zone. That means your trade, your 1 to 2 trade is still running, but you adjust your stop loss. Then wait till the moving average crosses above. Wait till the moving average crosses themselves above. When they crosses each other, that's when you can exit. You understand? You can see how much we made more. Guys, you can see how profitable this is. You can just adjust your stop loss, then leave the trade running, then wait till the crossover, then exit the market. You can see why I included the moving average. Let's take one more example. This and that trade here. This is another trade setup. The market touched our resistance, bounced back, touched, bounced back, touched the support, bounced back, touched, bounced back, bounced back, bounced back. Finally, it broke out here with a big momentum candle. Then we enter for a short. Where will our stop loss be? Your stop loss could be, to be safe, could be above that candle, or you could put it below the resistance line, but I advise you to play it safe. Just put it above that candle that broke the support or resistance line. Target at what? 1 2 2. Then after that, adjust our stop loss, then we keep the trade running. That's it for me, guys. That's it. That's how to enter and exit. I hope this video gave you guys a lot of value. If you did, smash the like button and subscribe and share. You understand? You guys can have as much success like this. Trading is not more than this. It's all about risk management and psychology. You understand? Trading is a game of probabilities. You can't be right always. That's why your risk management and your psychology needs to be intact. To me, they should be at least 99% accurate. You understand? To have the success you desire. See you guys later.